Hi everyone. I have a number of clients that originally purchased their homes within the past couple of years, and they're now in the process of trying to save up for retirement or save up for their children's college fund, or they're trying to find ways of reducing their the taxes that they pay every year. And so I wanted to share with you today some of the great benefits of owning an investment property and what it can do for you and your financial well-being and for your family for that matter. The number one, so there's 4 factors that I want to go over. Number one is how owning investment property gives you the ability to build wealth over time by paying off that mortgage. So over the course of, let's say, 30 years, if you purchase a property with a 30-year mortgage, that property is going to be paid off slowly over 30 years, and ultimately will be paid off completely. And so if you're looking for a great way of saving up for retirement in 30 years, let's say, for example, well, with a 30-year mortgage, your property will be paid off in 30 years, and now you've got this great investment property that's completely paid off. The second great benefit is appreciation. Properties here in Southern California typically appreciate about 5% per year. Sometimes it's more, sometimes it's less, but on average expect about a 5% appreciation rate. If you're purchasing a property for, let's say, for $500,000, and you're putting, let's say, 20% down, well, that's about a $100,000 investment on a property that is appreciating about $25,000 a year. So while the property appreciates at 5% per year, your return on your investment is actually a lot more than that. In this example, it would actually be 25% return on your investment. The third great benefit is cash flow. Now, over time, rents increase, just like they do in terms of property values. So over time, expect about a 5% appreciation rate for the amount that you're charging in rent on your property. So as you can see, let's say you're renting a property out today for $2,000. Well, next year that rent might be worth $2,100. The year after that, it might be worth more than $2,200, and on and on and on. So just if a property doesn't appreciate on day one, which is not usually uncommon for folks that are purchasing a property for a 20 or 30% down. But if you look at the long term, you'll see that as rents go up, your cash flow is going to increase. And heck, in 10, 20, 30 years, you're going to have really good cash flow on that property. The fourth great benefit is your tax benefits. Now, you can certainly run off your mortgage interest and your cost of repairs and maintenance and the cost of services such as property management and that. But one thing that people oftentimes overlook is the ability to write off their depreciation. And that is the ability to depreciate the physical attributes and the physical structure of the property over the course of 27.5 years. And that's usually about half of the value of the entire property. So that can really add up to be a lot of money that people can write off in taxes. If you have any questions about building wealth with real estate or purchasing or selling real estate, feel free to reach out to us. We'd love to help you. Thanks for tuning in.